Welcome to yet another Bloke in a Pub, slightly different setting this time because I came into work with one of my priestly collars and waistcoats on. So I thought this would be a good time to talk about Gilt. Now, I don't mean the Gilt not going to Parliament to negotiate a workable Brexit deal, Theresa. What I'm actually talking about is a security. It's a loan to the British government. It's called a gilt. It's called a gilt because when you buy one, you get a certificate, and around the edge, it's got gold gilt edging. It's also called a gilt-edged investment because it's arguably the safest investment in the world. The reason for that is that at least till this point, the British government have never defaulted on a debt. It's the only government in the world that's never defaulted. So this is like the gold standard. And the reason we would be interested in gilts at the moment is that there's a broad consensus that the global economy is slowing, growth rates are slowing, and we're heading towards the end of the business cycle. So you get growth, then you get a recession, you get a recovery, growth, and the cycle keeps repeating itself. The reason you'd be interested in gilts is that when equity markets dip, money tends to flow out of equity markets, and it's something called flight to quality. Money is looking for a safe haven. And one of those safe havens is gilts. And because there's only a limited stock of government loan stock that's issued, as demand grows for money coming out of equity markets, as they start to dip as you go into recession, it pushes gilts up in value. If you have gilts and equities in a portfolio, as equities start to drop, gilts will offset that loss. And one of the things that we'd be looking to do in a portfolio as we move towards the end of the business cycle is to progressively introduce some of these holdings to make the portfolio a little bit more resilient. So what does this mean for you as an investor? Well, what you'll be seeing in the portfolios that we run for you is we've started to introduce these strategies, and we'll be introducing them progressively over the course of this year on the basis that it looks like we're heading towards, as I say, the end of the business cycle with a growing potential for recession. Should you be worried about recession at the moment and whether we should be doing something more about it? And the argument there is probably no, because it's almost impossible to predict when a recession is going to happen. So all we look to do is make gentle changes to a portfolio over time to make it more resilient so that we're ready when it does. So that's Gilt. Nothing to feel bad about in that. And we will see you again next time.